Welcome to Trading Nation. I'm Sara Eisen. Today we are looking at Apple ahead of its earnings season on Tuesday. Shares tumbling 9% since its high hit last month. This as concerns linger around a slowing iPhone cycle. So, is Apple a buy ahead of earnings, or is there more pain ahead? Wald is with Oppenheimer. Stacey Gilbert is with Susquehanna. Stacey, a lot of caution going into these numbers. How does it look to you?
Yeah, even from the options perspective, that caution still remains. So if we look at the implied move, it's roughly 5%, and this is a touch higher than what we typically see for Apple. Over the last 4 quarters, the close-to-close realized move has been closer to 3%, and if you go back 8 quarters, you're getting closer to 4%. So there is additional risk being priced into this quarter. But as you said, Sarah, that's not surprising, as every analyst out there, it feels like, has come in and is reducing their numbers or talking cautiously about the iPhone. A couple things I would highlight just from actual sentiment of what we're seeing trading within the Apple options. The majority of the flow is focused on protective puts. So this isn't saying I'm really nervous going into earnings, I think Apple's going to pull back substantially. It really is a much more protective nature that the risk seems to be to the downside. If Apple struggles to get over the already lowered bar expectation, I think investors are much more concerned about the downside here. We are not seeing much positioning at all for anyone looking for a relief rally that, oh, you know, yes, the bar was low, and at least they met that bar. Nobody seems to be positioning for that. One last comment I would make, there's obviously a lot of talk what's going on in terms of giving back to the shareholders. What are they going to do with cash? There is an expectation, if you look at the options, that the dividend can increase slightly, but it wouldn't be anything out of the ordinary, or at least is not being priced in out of the ordinary to the trend that Apple has done over the past couple of years.
Might see a massive buyback, though. I know there's some expectation of that. Ari,
Yes.
What do the charts show with Apple?
The charts show mixed readings, and Sarah, anytime I have mixed readings, we'd rather side cautiously as well. I think there's some better setups here that we think there is some risk that the Apple could be in store for some additional near-term losses. Here's what I'm talking about, and specifically looking at Apple's trend, and I think the stock's 200-day moving average is a great job picking up what that trend is, and we can see there's been a real noticeable slowing in that trend through the course in recent months, specifically that after a very strong uptrend in 2017, we're seeing the ascent of that 200-day moving average begin to slow. And, you know, once you start to talk about slowing momentum, you do open up the risk that you know, the slowing momentum could then turn into negative momentum. So we would side cautiously. We like tech for the long run, but as it stands right now, we prefer to play on the software side of the sector. So we'd stay away from Apple.
Yeah, a lot of nervousness around those iPhone numbers in particular. Guys, we'll leave it there. Thank you, Stacey and Ari. And thank you all for watching Trading Nation. I'm Sara Eisen. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.